big chance we will see more banking collapses in upcoming months. The upwards effect on Bitcoin is serious. I'm considering selling part of my Tesla shares, 85%, with a break even at 177, or my Tesla January 24 call option, which is at $165 strike price, and put that into Bitcoin. Do you expect Bitcoin to outperform Tesla in the coming months? Unfortunately, no additional dry powder. So crypto enthusiasts, you're doing a lot of what I do. I swing back and forth between assets when I can. But let's talk first, before we jump in, about the potential of the banking crisis. This guy, Hugh Henry, had he's been on TV a lot over the last couple of days, and he is concerned about many things. He is a hedge fund manager. I think he's from Glasgow, Scotland, so shout out to anybody here from Scotland right now. And he warns that the US government may freeze American bank withdrawals. And when you think about that, that sounds like a bit of fear-mongering, fear porn, whatever you want to call it. But let's dig into what he thinks. So he says it's because of mass panic and capital flight away from the US banking sector. That has not slowed down, so he is correct there. And then he says there is a further decline in M2 money supply that could convince the government to take this step. Remember, M2 money supply has fallen, I think, 4% this year, which is huge, and it's historical. Also, Henry, and by the way, a 4% drop in money supply is like a 100 basis point increase in interest rates. And Henry also said that capital flight from US banks is not solely about fears of whether the FDIC will insure deposits above 250K. It's also about chasing money market funds' higher returns. And without a banking system, the economy is toast. And this is the problem. And Henry says his go-to is both Bitcoin and US Treasuries for safety. So you're kind of correct in the fact that if things do get bad really fast, we could see a massive spike into Bitcoin, and that could drive the price crazy. But the way I look at this is a little bit different. I think we need to look at the impact of what is really going on. And you'd think that the Fed would understand this, but they've proven themselves to be wrong time and time again. They're always late. They're always wrong. They look at silly data that's old and aged, and they are, They are not practitioners, but they are academics, and they're clearly clueless. But the key ratio we need to look at is M by V equals P by Y. So basically, M is the money supply times the velocity of money, how much it's active. Right now, people are afraid, so they're not spending money. So V is going down, and so is M. This is the danger, because the other part of the equation, P equals Y, P is the price level. Obviously, that's tanking. It's going deflationary, many assets. And Y is the real GDP. So when you have the money supply going down by 4% and nobody's spending, GDP is going to tank. And this, combined with the banking crisis, is going to smash everything. And I think, although Hugh Henry didn't mention that, I think that's the biggest concern around the M2 and why the US government, etc., could put a clamp down. It's highly unlikely. If that did happen, it would destroy all trust that Americans would ever have in the banking system and the government. And then Bitcoin could go to infinity. So you're kind of right there. But let's look at some charts. And the chances of this happening are very small, I think. 1%, maybe 5%, that's it. But let's look at the pair chart. I did say we look at a couple of pairs today. This is the chart of Bitcoin over Tesla, and it's the daily chart. And obviously, we're at the top of the range. But what exactly does that mean? Let's flip forward to, I always look at roofs and floors, and floor I misspelled, of course, just like the Bitcoin dominance. But the roof here is about a 180-ish, and the floor is about 80-ish between Bitcoin over Tesla pair. We are at the roof. Typically, that's the time you flip Bitcoin into Tesla, not Tesla into Bitcoin. So from that perspective, I'd be a little bit careful. In addition, when we look at the correlation coefficient, you can see they're not entirely correlated. They're both risk-on assets. So from that perspective, yes. But there are times when one moves and the other one doesn't. In fact, what I've noticed lately is Tesla runs counter to the market pretty much for most this year. If the market's tanking, Tesla goes up. If the market's going up, Tesla goes down. It's kind of bizarre. So there's weird stuff going on. And again, as I mentioned, the monetary media is clueless about Tesla. They don't understand what it is. And they're funded by other advertisers or whatever else that have them pushing their own kind of agenda on stocks. And that's the weird thing about the world today. Everything you read, everything you see on TV is most probably a lie. So in summary, if I look at my price targets going out a year from now, and this could be a year and a half from now. We'll just say April 2024, because I do believe Bitcoin could hit 42K by the halving date. Some people think it could go to 64. But either way, conservatively, 42K is a 44% gain from where we are today. And I think as we see things develop in the Tesla world and what's happening with their competition and what's happening with their margins and their other products that are coming to the line, I think Tesla could easily be $340, which is a 100% gain by April 2024. So from that perspective, I still, in answer to your question, over the next year to 18 months, I think Tesla has more upside. But Bitcoin has that wild card, that is, the monetary system is falling apart. The banks are falling apart. The world is built in a house of debt. It could all implode at any second, and that would drive Bitcoin to infinity. So that's the risk you've got to take. That's why I play with both and swing between both whenever I can. So I hope that helps. And these are sandbag targets, could go a lot higher.